I think it's only normal now with silver becoming more important that those countries, which basically now are BRICS, are becoming more and more important. So that's why I think this 150-year price suppression is coming to a close. And that's why I think the value of the fiat dollar is going to go a lot lower versus silver, or silver is going to go a lot higher. It's interesting because if the price of silver were at $2,000 an ounce, that would be quite economical. So I think the only thing that will solve this problem will be a much higher price. As for the supply, I think the supply is out there of silver.
For decades, the silver market has operated on illusion rather than substance. Mario Innecco, a veteran market analyst, believes that the problems in the silver market stem not from scarcity but from its deeply flawed structure. This system has allowed for years of price manipulation and over-leverage, disconnecting silver's market price from its true physical value. Now that silver has broken above the historic $50 level, he argues that confidence in the paper market is fading, with investors increasingly unwilling to sell or lend their holdings, setting the stage for a much higher price trajectory. He also drew historical parallels to show how silver's monetary role was deliberately suppressed to strengthen fiat systems. Innecco recalled that silver's demonetization began with the 1873 crime of 1873, when the United States abandoned the bimetallic standard. Later in 1980 and again in 2011, attempts to re-establish silver's importance were thwarted by aggressive interventions, from the Hunt brothers' collapse under Paul Volcker's pressure to JPMorgan's alleged role in the 2011 crash. He believes keeping silver below $50 became a symbolic anchor for maintaining trust in fiat currencies, particularly the US dollar. As BRICS nations like China and India, once global centers of silver-based economies, rise again, he sees the balance of monetary power shifting eastward. The growing demand for physical metal, alongside central banks diversifying away from the dollar, points to a major transformation in the global financial order. In his view, the end of silver's 150-year suppression will mark not just a revival of its monetary importance but also the beginning of a structural decline in the real value of the US dollar relative to tangible assets such as silver and gold. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Yeah, the silver, what Eric said about 100 airplanes is interesting because if the price of silver were at $2,000 an ounce, that would be quite economical. So I think the only thing that will solve this problem will be a much higher price. As for the supply, I think the supply is out there of silver. It's just that the bullion banks for the last, well, almost 40 years since the LBMA was created by the Big Bang deregulation of Margaret Thatcher in 1987, has been a paper market, and the bullion banks and the people that trade in that market, they don't care about physical that much, and unfortunately for them, people want the real thing now, not just sovereign countries and countries in the East, but even big billionaire investors in the West. They're starting to realize they need the real thing. And I think that's why the silver isn't there for sale, because people know it's going to go a lot higher. We've just broken 50, which was a historic level. And I think, yeah, even though it might retest that 50 level, I think it's only going higher. So people are very reluctant to lend it out. And that's why the lease rates have gone through the roof. As for gold, Eric has made a good summary of what's going on vis-a-vis China and the BRICS and the trade war or a tariff war. I think one of the other reasons gold is going up or the fiat currencies are going down is because people are starting to realize that the central bankers have to inflate the system away because the debt is unsustainable. And I think also the Trump administration, they've put a big chink in the armor, so to speak, of Federal Reserve independence. We've seen that Yeah, they've caved in at the Fed. I don't think they really wanted to cut rates in September, but now, yeah, now they're going to cut. I even saw yesterday that Powell said they're going to stop the QT, and they got one of Trump's guys on the Fed board, Stephen Mirin, and he wants a devalued dollar, and so does Trump and Besant, even though they say that the dollar is still the best currency. And yeah, also the central banks around the world. They want an alternative to the dollar, and the only alternative as a monetary reserve asset is gold. So that's why gold is going up. And in the West, yeah, people are starting to wake up about it. But I see that it's more in places like Japan, Hong Kong, and even Australia, where people are lining up now to buy physical gold and silver. Here in the UK, I haven't seen that yet, even though the Royal Mint has said that the purchase by retail has gone up a lot. I think physical gold and silver is going to play a huge part in being able to come back from a currency collapse. But it's a prospect we need to keep in mind because the probability now is getting higher and higher that we will see some kind of currency event. And I think the powers that be will try to exploit it to make things even, to control us even more. But I think they will fail because they tried that in France, revolutionary France, after the assignats failed miserably. They they were going to bring in another currency called the mandat territorial, and that didn't even get off the ground, and it collapsed completely even before they issued the currency. So yeah, my hope is that all this talk of stable coins, CBDC, that would be just talk.
Innecco highlighted the growing fragility of the Western precious metals system, noting that the COMEX and LBMA markets operate on excessive leverage and double-counted inventories rather than genuine physical supply. The image of hundreds of airplanes needed to transport silver from COMEX underscored, in his view, how little real metal is available for actual delivery. After 4 decades of reliance on this paper-based structure, he believes confidence is eroding as investors and nations increasingly demand physical settlement. This breakdown, Innecco argued, is already shifting global trade toward the east, particularly to markets like Shanghai, where transactions are rooted in tangible metal rather than speculative contracts. Building on this, Innecco warned that the current system's weakness could culminate in a broader monetary crisis. As faith in fiat currencies continues to wane, he believes physical gold and silver will become essential in restoring stability after any potential currency collapse. The world's mounting debt burden and overextended financial system, he suggested, makes such an outcome increasingly probable. In that context, nations and investors turning to real assets may not only protect themselves but also lay the groundwork for a new, more grounded global monetary order. Let's get back to the interview.
It's going to take hundreds of airplanes to bring the silver from COMEX. And the other thing that we haven't really looked at, I think the COMEX warehouses and their supplies of silver are a little bit like on the LBMA. It seems to me that it's double counted because, as Eric said, the bullion banks use these warehouses and these ETFs to satisfy the demand for physical. So when they need physical, they'll go to SLV, GLD, or they even went for PSLV. I remember a few months ago, they're trying to borrow PSLV
all the
because the PSLV trust when there's net buying, they need to buy physical silver. So yeah, it's exposing a whole fraudulent, in my opinion, fractional reserve nature of well, basically it's a foreign exchange OTC LBMA market. Yes, COMEX is exchange traded, but it's intertwined with that. So that's what's happening, I think. And it's been like that for 40 years, as I said earlier. And I think this mechanism is failing. And that's why we're going to see the precious metals market move in importance east, and we're already seeing that with Shanghai and other places. I met a guy in Zurich about a year ago at a precious metals conference. I call him the Gnome of Zurich because he doesn't want his name to be publicized. And he told me a story of Germany after the Franco-Prussian War of 1871. They won and they had loads of silver and they didn't know what to do with it. And Bismarck told the Kaiser we should sell the silver, and that drove the price a lot lower. And then a couple of years later, the United States decided to demonetize silver. They used to have a bimetallic system. The Act 1873, they call it the Great Crime of 1873. And ever since then, silver has been played second fiddle to gold. And I think the 50 level is significant because silver tried in 1980 to get to become important again, and they squashed it. I mean, I spoke to Peter Carlin, who wrote a book with Jim Sinclair, and he told me how Jim Sinclair was called in by Paul Volcker to try to stop the Hunt brothers. And then in 2011, we tried again to go above 50, and JPMorgan, the rumor is JPMorgan smashed the price of silver. It dropped out of bed. Everyone was shocked. So that's why 50 is so important, because I think, it's going to be hard to get silver back below 50. And the other thing about silver, I think, is that the whole of the East, Asia, India, and those nations prior to the 1930s and even 1870, they used silver as money. And what the suppression has done to those nations in that part of the world is to really hurt them, because about 250 years ago, the major nations of the world economically were China and India. So I think it's only normal now with silver becoming more important that those countries, which basically now are BRICS, are becoming more and more important. So that's why I think this 150-year price suppression is coming to a close. And that's why I think the value of the fiat dollar is going to go a lot lower versus silver, or silver is going to go a lot higher.
The ongoing transformation in the silver market signals more than just a price shift. It marks a profound change in the foundation of global finance. After decades of paper manipulation and artificial suppression, confidence in the Western silver system is breaking down as investors and nations increasingly demand the real metal. This move toward physical ownership and settlement, particularly in the East, suggests that silver is on the verge of reclaiming its historical role as true money. As the illusion of abundance created by leveraged markets fades, silver's scarcity and intrinsic value are being reasserted, positioning it not only as a hedge against collapsing fiat systems but as a cornerstone of the emerging monetary order. Could the growing shift from paper trading to physical demand mark the beginning of a new era where silver once again serves as a foundation for global monetary stability? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.